Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 40th Commitments of Traders Report of 2024. And as we always do, we shall start out by looking at the largest changes in commercials net positions. But before we jump to the review, just a brief reminder for anyone who's new to COT analysis here at COTBase.com. You can actually find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well that can guide you through the analysis process. And of course, if you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Let's get to this week's review, where we're going to be starting off with crude oil. I should mention we are analyzing the classic COT report type, futures and options data combined. And as you can see, based off of a 52-week look back period, if we order markets, crude oil stands on the top with a 54% change in commercials net positions. We of course identify commercials, large speculators, and small speculators. Commercials represented with the red line, green for large speculators, and on a separate scale chart. Due to the much smaller volume they're trading, small speculators, or as CFTC calls them, non-reportables, they don't need to report. So here we have this change signal that is bearish, suggesting weakness coming. However, if you do a bit of analysis of what happened in the past, an example over here in December, honestly, this may not be the signal I want to act upon due to its inefficiency. If you do a bit of a historical analysis, Brent crude oil change signals, I would rather move on. Looking at a 5 years chart, we can argue it's leaning a little bit towards the bearish side, but again, nothing obvious and straightforward. So probably using classic COT analysis, I just skip the crude oil. And if we really want to trade it, I might as well open our wonderful iCOT Intraday Indicator, which is a great tool to analyze any market. Later on that, live cattle is our next market for the review. 28% change over here in commercials net positions. There we go. And it is suggesting weakness coming. Great to see the market is in rally mode, and we always like to see change signals pointing in the opposite direction. Here, if you look at the chart, you can see just before reaching a bottom, we are getting a bit larger than average change sizes. So I would argue that COT change analysis may actually be a little bit more useful in livestock markets. Moving to a 5 years chart, you can see that if we look at the commercials net positions and taking this horizontal red line, you can see on the chart there's no real extreme to talk about, right? So you can argue we had a bullish COT extreme over here in the early part of this year. That's pretty much it. So again, not much from COT extreme analysis. Moving to soybean oil, as you saw, I just skipped a livestock complex markets here are where we combine the individual markets COT data into one market sector data. That's something unique for our subscribers. Soybean oil is our next market. Here we have that 24% change in commercials net positions. You can see that it is greater than average. And once again, we can find examples of very successful bearish change signals. I'd say this one is probably the most successful of them all. So again, this is suggesting weakness coming in the next few days. Now, if we move to the 5 years chart, we can see that with this, with these larger than average changes happening in the past couple of weeks, we are moving towards bearish extreme levels. We're still far away because we were actually mid this year, June, talking about a bullish COT extreme situation. However, as you can see, there wasn't much of a long-lasting effect. So the market actually has been able to come further down even though we had that bullish COT extreme. So again, maybe not the most exciting markets. But moving on to large speculator COT extreme analysis, We have the Australian dollar on top of our list with a 340 report extreme in large speculators net positions. So we're going to stay on this 5 years chart, and you can see large speculators are again net long. This, as you can see in the past, coincided with more of a top, so a topping signal. This is a bearish COT extreme suggesting weakness coming in the next couple of months, possibly years. We should be cautious. These extremes could be present in the market for many, many weeks, months before the market actually reacts. So if you want something more dynamic, maybe you want to give iCOT Intraday Indicator, our own unique intraday indicator, a chance to prove itself. And here's the Australian dollar, US dollar currency pair. We've got the iCOT scores chart underneath. This is our own unique COT charts. We can call it that, but it is not data from CFTC. I should like to underline that crucial fact. And then putting the iCOT intraday indicator with AfterSignal. This is the default settings. The default settings of the indicator reacts to these so-called stripe signals. So these vertical green and red lines. These are the most significant signal types of the indicator, and you can see it's quite successful. If you'd like to know more about this unique indicator, you can visit indicators and on our website, and you can check out iCOT Intraday Indicator. This is the first version of the indicator. It gives you all the signals, but would not necessarily help you in entering the trade. That's something you need to decide on your own. Whereas the iCOT Intraday Indicator with AfterSignal will actually draw these lines for you. These are stop lines and tell you when to enter the market. For instance, here's a good example. We have signal after signal, but the AfterSignal will actually filter out a lot of unsuccessful signals and tell you when to buy or sell into that specific trade. Back to the review and moving on to, well, we talked about the soybean oil, so we're going to jump over that. And the complex is sugar, 43 report extreme. So that's why I always say open the charts themselves, because they do tell a bit more. So I would consider this to be a relative bearish COT extreme. So nothing, all-time or close to all-time. But it is an extreme I'd be, excited about if I were to be, swing trading sugar. We see that sugar has risen a lot, and this extreme, this relative extreme developed after a couple weeks. So the report is telling that we may see a top here. That's something, of course, we can identify if it happens in a couple weeks' time. Because, of course, if we talk about COT extreme analysis, all-time COT extremes are always, those are the most unique ones. Because, for instance, here from 2016, this is an extreme that we have never saw in the past. This is an entire history of COT data. Something unique about us is we actually give you the opportunity to analyze the entire data. Since it started being published in case of sugar, we're talking about data going back to 2007. And here in 2016, you can see a wonderful example of a successful bearish COT extreme signal. That's something that's very obvious, but relative extremes could be successful as well. So obviously used in combination with other tools, possibly the iCOT Intraday Indicator itself can give you a better result. And then last but not least, here's an interesting example of cocoa, which we of course saw this year skyrocketing to unseen territories. What's interesting to see is over here, September of 2023, we had a bearish COT extreme, which, as you can see, initially was successful. But I would argue that this launched a so-called commercial capitulation. Commercials getting margin calls as the market's headed higher. So hedgers weren't really able to hedge because they were getting margin calls. This could have been one of those cases. On our COT page, we do have a brief article about cotton, an example from the past explaining to you how commercial capitulations exist. These are very unique and very rare events when the commercials who are mainly in the market to hedge their normal business activities are getting margin calls, and they have to close their position, fueling the rally. And that's, I think, something that happened in cocoa, which is quite interesting. So that was all for this review. Of course, there's so much to do here at COTBase.com. If you are interested in analyzing other markets, then we, of course, give you all these market categories, other data sets. If you want to analyze a specific market, we talked about the Australian dollar. Here you go, just to give you all the market data, COT data available on the Australian dollar. You can see it's here. If you are a pro member, you can actually download the data, export. If you want to use it in your own systems, then that's available as well. Thank you very much for your attention. I hope you enjoyed my review. If you did, please hit the like button, and I will see you in my next COT review. Take care. Goodbye.